I think there's some harvest pressure yet on the corn that'll probably take some basis numbers away, even if the board does make a move.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. And once again, I want to remind you, make sure you like these videos. Make sure you subscribe to the videos. How do you do that? Well, you click on that little bell icon down below and choose all, set it to all so we can notify you every time there's a new episode coming out. And then make sure you share these videos with others so we can help get these stories out as we continue to grow. Well, I'm pleased to be joined today by Justin McKinney of Comstock Investments. And we're going to talk about Tuesday's market action. And right off the top, Justin, I have to say that it was not one of those red letter days when it comes to the ag commodities, unless you think red means negative. So let's talk about this. We'll start with the grains here. What in the world got everything in such a sour mood on a Tuesday?
Well, to start off with, very disappointing, as you said. We had flash sales to China today, 131,000 tons of soybeans. Followed that up with 120,000 tons of SRW wheat into Mexico. Mexico's been a great buyer of our commodities all year. So, we have these flash sales. We think we're getting to a price that's spurring demand, and yet we have a meltdown on the Chicago Board of Trade here. The December corn went down. We were hoping that 62% retracement would hold. It did not. There's a little bit of support close to the $4, but all in all, you hate to be a self-fulfilling prophecy, but those lows that are hanging below the market from back at September basis contracts obviously are the eyes of the targets at this point in time, unless we can get this thing turned around. And to follow that up with, again, positive news, we had a NOPA crush report out today with 177 million bushels, which was an excellent crush number. Top end of the range, significantly over last month, 19 million bushels or so over last month. Again, we saw soy oil futures up, meal down, and beans down. We've been hearing about this crush demand for basically a year and a half now. We're crushing these beans and still in a falling market, which is, very concerning as to at what price do we step in and see some of these markets get bought up.
One thing about it on the soybeans, like you said on the corn, the November contract blew out that 62% retracement today. I mean, just blew it out. And it was showing double-digit losses there for a while. But maybe it was the NOPA crush report that brought it off its lows. I mean, it actually came off, over double digits from its earlier lows in the day. So it's kind of a glass half full, half empty type thing, isn't it? I mean, it was a bad day, but it could have been much worse.
I would agree on the soybean side of things. Bad day, could have been worse. That NOPA crush number was positive. We also did see that November-January spread narrow in 3 cents today. So something there is saying we have demand forming in the November, whether that's additional exports or the NOPA crush numbers that were out today. Time will tell. But it was, like you say, glass half full probably on the soybeans. The corn, but it just struggled. We have a wheat market that continues to topple on about any news. And I've been saying that for the last couple days or, a week in the report that we've been writing. That wheat market just feels kind of stale. We've talked the Russian story. We've talked the Black Sea story, Australia. And, as soon as a rain cloud goes across the plains, we're down 27 cents in 2 days. So, it just feels stale, and the path to least resistance at this time is definitely lower unless we find some support here.
Yeah, the rain in South America, I would imagine that's kind of knocking the props out from underneath the soybean trade here. And from what I understand, I mean, it could be rainy for a while down there, right? Aren't they entering their monsoon period?
Yeah, so, and they need a bunch of rain they obviously, everybody knows they cannot hold a bunch of water, but they do need a bunch of water to refill some of the shipping canals and channels and things like that. So, they do need the water. They do need to get planted. Much like here, when the time comes, it just seems like it flies in. I've never been down there to witness it, but you almost have to bet on it getting planted at this stage in the game.
Well, a couple of weeks ago, we all talked about it, the fact that corn and soybeans, well, even wheat for that matter, we're all getting kind of overbought short term. And we just wondered how much of a correction there would be. Well, obviously, we got at least 62% retracement. Do you think they're going to test recent lows anytime soon?
Again, I love these on the spot questions that are negative, but yes, I do. We still probably we're going to get the crop production numbers out, harvest pace out tonight. Probably going to be 50% or better. Well, it's a dry crop in Minnesota and north, so it stores easy. Guys that normally have to go to, say, a country elevator for drying have excuse me, have a few more options. Have a few more options to deliver that, maybe direct to ethanol. So dry crops harvest fast, they store easy. However, we're only knocking maybe the 50%. So we still have yet to see the bins get full and a little bit of harvest pressure, which is kind of a little bit concerning when we look at this thing. And targeting that 385 low, well, we're only about 16 cents above that right now.
The thing that really jumped off the screen when I first looked at the markets as they came out of the overnight trade would have been what was going on in the energy markets. And crude oil was down $3 to, more than $4 at times. Just a complete washout in the crude oil market. And from what I understand, I mean, that is kind of like a ball and chain on the grains too, isn't it, when that happens?
Absolutely. When you look at the second and third effects of the ethanol market, and we have crude oil that only trades in $3 and $4 swings either way anymore, depending on what kind of geopolitical headlines grab the traders in the morning. Is it China, lack of demand, economic worries, we're down? Is it Israel shooting some missiles into Iran? Iran shooting some missiles back, we're up. We're that seesaw flips every day is hard to pinpoint. But we do seem kind of range bound on the crude, at least for now. Big swings, so we have a little bit of cheaper energy. I'm trying to take advantage of that. If we ever get some rain, I'd kind of like to get a little bit of tillage done, but it's so dry on our place right now that could be tough to do.
Well, we did have the Dow there for a while. It was a little higher, but it flipped around and went lower. By the time we closed up the grain markets there, it looked like it was down, about 300 points, something like that. And, a lot of folks are very nervous about that equity market right now, the state of the economy. Is that going to weigh on things? For example, I bring you Exhibit B, and that would be our livestock trade. Is that part of the issue there?
Absolutely. We saw boxes today. We're back up to $316 choice boxes. That was up another $3.04 at the midday. Yesterday, up $2. This box beef market has just been on fire since we went down, I believe, about a month ago. We were in the 290s on the choice cutouts. So we've really rallied that back. Packers are back to cutting somewhat in positive margins. We'll see what the cash trade develops this week. But obviously, when you have higher boxes, cash trade that is yet to be established, probably at least steady to firmer heading into this week. And we see the futures market down to $1.52, which is obviously a little bit concerning when we look at the overall economic picture. And you had gold up $15 and silver up 40 cents today. So, obviously some risk off in the stock market. And when you continue to make new highs in the S&P and the Dow every day, at some point you wonder where the balloon's going to pop and at least set back some. I'm not forecasting a recession or any sort of depression or anything like that, but much like I had a client call in earlier today and he was talking about crude oil. Well, do you like it or not? And well, it seems range bound, but when it's down 5% already this morning, you have to look at the probability that you may see a little bit higher trade by the end of the day. Much like the stock market, we continue to set these new records, and when are they going to pull some money out? I know tonight's report, David is talking pretty extensively about Warren Buffett and how he's reallocated a bunch of Berkshire Hathaway, and that'll be a good, interesting read. I'm sure how they're allocating a significant portion of their portfolio to cash.
The livestock trade, I'm looking at live cattle, feeder cattle, and lean hogs. and it looks like they're all just kind of sitting on or maybe on the verge of taking out the 20 or the 21-day moving average, whichever you prefer to track. Um, and so they appear to be kind of at a bit of a crossroads right now, don't they? Do you consider them overbought or not?
That December cattle contract was definitely bumping up there. We've been talking about, well, it is overbought on the statistics. We've talked about that in our morning report the last couple of days, whether you're looking at LRP, put options, hedges, something where within $3 of the summer highs. Maybe it was time to take a look at that. So that doesn't necessarily surprise me. What does surprise me is we were able to push it down to $1.40, $1.50 on those cattle contracts when you have boxes of $5 in one day.
That's something I did want to remind everybody too. You mentioned that morning report, and I know you're involved in the comments on that. That is part of our premium service, and a lot of folks can get really detailed market analysis, maybe market advice on some things that present some opportunities there. And just want to remind everybody they can check that out. You can get a month of it for just $1 if you want to take a look at the valuable information on there. And gosh, the time of the year would be great to do that. You can really get some great resources there. So you might check that out. And you actually have 2 episodes a day that come out as far as the newsletters, right?
Just kind of recapping what happened the day before in the morning, what we look for that day. And then the night report is a little bit more in depth from the 10,000 foot view and the broker comments about what happened for the day. So, yep, go ahead and reach out to us and we can get you signed up.
Well, I can vouch for the fact that a couple of weeks ago, I think you saved a bunch of people a lot of money by getting some timing on some marketing advice that you folks had issued on that morning report. And man, that has panned out terrifically in the last couple of weeks. So anybody that paid attention to what you were talking about, they were rewarded pretty greatly there. What about the markets overall as we get into the harvest and maybe past the halfway point now? Is harvest pressure still going to be a drag on the market, do you think? Or are we quickly getting to the end of that and everything's going to focus now on Brazil?
Tale of two crops. I think the beans are pretty well wrapped up. I did a pretty good circle over the weekend of driving. It was hard pressed to find many fields of soybeans left to combine. Most of them are out, and guys are working on corn, making really good progress up here. I assume everywhere else, everybody I talk to. So it does feel like there's probably a little bit of corn pressure coming yet in the next couple of weeks as people get full. Missouri's been battling this for quite some time now with huge yields down there. Actually, where we deliver a bunch of corn in Wisconsin is, getting up to the rafters, so to speak. So I think there's some harvest pressure yet on the corn that'll probably take some basis numbers away, even if the board does make a move.
Yeah, I've been hearing storage is kind of at a premium this fall, right?
Yeah, for sure. And the carry in the market justifies that. Also spending 18 years of my life in the commercial business. I obviously don't like seeing those storage bills either, but when you look at the cost that they have involved in maintaining those bin structures and hiring cranes to come in and fix everything, it's just one of those inflationary things that are the horses out of the barn, and he's a tough one to catch and get back in.
I'm glad you mentioned that because you dealt with barge traffic, you dealt with rail traffic, you dealt with truck traffic, and it sounds like they're having a hard time getting things shipped down the river system because the water levels are so low. Is that putting a bind on rail car availability these days? Have you heard anything in that regard?
Yeah, a little bit. Rail is kind of first off, full disclaimer, I traded significantly more barge and truck than I ever did rail. So very little rail trading, but that's kind of a different animal because it's dependent on when you get your cars placed to you. Obviously, depending on where the cars are at and what the demand is, but when you have an early harvest and such a big yield in Illinois and Missouri, and you're looking at those cars, huge draw. We talked to one of our brokers in Kansas, still paying wildly over numbers at feed yards and feed mills to secure physical corn yet. So you do have a lot of demand for cars headed that way. and it's when they get turned around and get back. You look at the river levels, and we talk about barge traffic and things like that. But for the right money, they'll get it done, right? It's kind of like everything. If you want to pay for it and get it done, it'll get done. But it does throw quite the wrench in. You look at harvest as a whole, the guys south, southern third of Illinois or the very bottom of Illinois and below, they combine crops and they put it on barges and it goes away. They run, some sort of DP program or storage or however that elevator chooses to do that. But so often those crops are combined, shipped, and moved on. And when you can't load barges as full as you normally would, or you have potential for hurricanes coming in and delaying shipping, things like that, it really starts to back up, and it backs up quickly.
Well, Justin, great to talk with you again. Thank you for all the information today. Real good stuff. And again, I want to encourage everybody, check out the morning comments. Justin writes a lot of that material, and you can check that out. Again, you can get it for a month for just $1. Check it out. That'll do it for this episode. Thanks again for tuning in. Appreciate that. For producer Brianne Hendrickson, I'm Marlon Bowling. We'll catch you next time right here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.